and unfortunately our last trading day for this week, and unfortunately the last morning briefing show sorry, here on with Admirals, and with me, my name is Markus Gabel, and I'm your host of this morning briefing show. So let me say welcome, and for those of you that had yesterday here in Germany or in other countries, the so-called Father's Day, I hope you had a lovely and a great day, and you can spend a lot of time with your family, with your friends, maybe with yourself, kind of far away from trading. And today we are back in trading, and today we want to talk about a couple of very interesting and, in my view, very important things, kind of based on that what we talked about yesterday. So I hope you can hear me and you can see me. And by the way, if you watch it on YouTube, of course, we stream this Zoom meeting here on YouTube live. If you watch it later on YouTube, or maybe right now on live, then click on the right side. There's a subscribe button. Then you will never miss an episode, of course, and you can give us a like if you say, okay, that's a cool show. I'll learn a little bit about trading. Or if you want to leave a comment, then you can do it below this video on YouTube, and then we can get in touch directly. Because for me, it is, how should I say, that's my purpose of existence, that I can guide you, that I can lead you, that I can protect you from big trading losses. And this is my mission, because I want that first of all, I want that you be happy in your life. And trading is a really cool stuff to become a happy person. If you follow the rules, if you see how you can make money in the markets. And this is the main topic of our morning briefing show. The real reason, or the deep cause why we created this show for you, because it was my intention to convince Admirals to create this daily show to show people around the world how you can make money in markets on a real basement and with really structured trading, not with any kind of guessing or gambling or something else. That is not the point how you can make money. We need to find a way which fits to you personally, and trading is an individual stuff, which fits to you, and so you can make money in the markets. And if you think this show is a cool thing, I can learn a little bit, and people around of you, maybe from other places on YouTube or Facebook or Instagram, and people and you're connected to those. So invite the people to this morning show so we can increase our family, the listeners and the participants. And the more we are in that show, and the more we are trading on a structured and proper way, the more we are able to change something. So, we are traders, and we take over our own responsibility to change something in that world. I took over this responsibility, and therefore I have chosen to go this way with you and to share my knowledge with you, to show you a way. Maybe it's not the way, that doesn't exist the way to success, but it's kind of a way to become successful in trading. And first of all, the most important topic is to follow any rules, and I hope you follow your own rules. Okay, so let's switch to my slides. So first of all, you see I'm not at home. Actually, I'm in Frankfurt there, so I have another background, and I hope the connection is as stable as possible, so I can share everything you need to know for this Friday. So I want to share now to my screen, and let me fix my technical part so I can see your questions right now. And I want to say thanks, of course, to my moderator in the back, to Anna. Without her, maybe we should say, Anna, thank you together, because without our Anna, we couldn't make this morning show every day. And therefore, thank you very much. So, and here we go, participants as well. So again, feel free to ask whatever is in your mind in the chat box of Zoom or as well in YouTube. Sometimes I have to check on YouTube as well. Leonardo, wonderful good morning. Barry, wonderful good morning. Albert, I can see on YouTube. Darom, I can see, wonderful good morning. Toffee. Oh, by the way, I love toffee, but I have other things today. That's, what's the English word? I know it's kind of sweet things. In German, we say Gummibärchen. That's not that calories for me, but it's fine to do that. Okay, so let's go to our upcoming events today. And don't be confused when I look up here, because there is my big screen, and here in front of me there's a camera of my MacBook, and here is up is my screen. So what we expect today, to be honest, for us as swing traders, not really important things. So in Canada, we expect the wholesale trade. In USA, we expect the industrial production and capacity utilization. Yeah, and Canada will come up this afternoon with the survey of manufacturing. So for us as swing traders, it's not that important. So we can be focused on the trades and our managing of our open trades right now. But I want to invite you as well to our afternoon show, why serious paper trading is as important as serious live trading. I guess Jens is talking about that this afternoon, or maybe Paul, I don't know right now. Yeah, let's see, but join it. And you will learn a lot of things, because this is an interesting topic, the difference between demo account paper trading and serious live trading. And you know, I have my own serious live trading here. I have my own real account here. So I'm struggling in the same way like you. So we have to cope the challenge together. And yeah, on Monday is the next one. And by the way, if you want to see what I'm doing when I change something, then you can follow my Twitter account, daytrader70, and then you will never miss some news when I open a trade or in that way. And by the way, today I want to show you what you can learn from YouTube. But first of all, let's go through our charts before we talk about our topic for today. So, yeah, let's start with Australian dollar, Swiss franc. So finally, I see we are kind of track right now. And I promised you that only two things can happen. So, you know, again, let me repeat this again and again. On the right side of your chart, you see this graph. And in this graph, you see the price. And I want to train you, or want to kind of train you, that you switch your focus away from the label. Label is Australian dollar, Swiss franc. Don't care about it. Why? It's just a label. It says nothing about what happens on the right side of the chart. But the price on the right side of the chart, this tells you the truth. So, and how should we judge a price? You can compare it with your own behavior. If you go to a grocery and you want to buy something, so, and you see what you want to buy, and then you make a judgment and you say, okay, it's a cool price, I will buy it. Or maybe you see, oh, that's really expensive. Oh, maybe we are out of a season. You want to buy strawberries or something else. And then you decide, okay, then not. Today, I don't buy that stuff. And the next time you go to the grocery and you see, oh gosh, it's a special offer. Oh, I have to take 2 or 3 ones today. So, and this is the only point you judge the price. Do you have emotions in this kind of judgment? Yeah, maybe if you cannot buy today because it's too expensive, you feel a little bit angry. Yeah, maybe, or the kind of disappointment, maybe because your expectations were, I want to buy this today. But then you are disappointed. So the stuff is not guilty. You cannot blame the stuff. It was about your expectations. So, but I guess you are not that guy who runs through the whole store and crying and shouting and yelling to people about the expensive price. Okay, you see, this is a kind of crazy. No one would do that. But this is what most of people do in trading. Yeah, they're yelling, they're shouting, they're blaming the market. They are kind of disappointing something else. Why? They have a lack of deep understanding what we are doing here. And at the end, we trade the price. And prices are only judged by expensive, cheap, or fair valued. So actually, here in this underlying or in this security, you can see we are kind of expensive. And in trading always, and this is a guarantee, always happen two things. First option, a price goes back to its normal stage. And this is kind of red line. So, and you find it in a kind of, yeah, okay. Now I missed my connection. That's cool. Okay, here we go. Let's go back. Yeah, you know, you work with TeamViewer here, and sometimes the connection is not that stable. Okay, so let's go back. That's live, you see. Okay, here we go. Cool. So therefore, the first option, a price, if the price is cheap or expensive, it goes back to a normal price. Yeah, based on a special history in 4-hourly chart, it's around about 1 year. So to consider price, which is more far away than 1 year, it makes no sense because we are living on the right side of the chart. And you can realize that doesn't change too much if you use more history. If you use 2 years history or 3 years, you will see the point of control will not switch in that way we could expect, because the focus is on the current price right now. So that's the first option. The second option is the market decides that the market will decides that he is expecting a new price as a normal price. And this is not a kind of religion or a kind of whatever it is. I'm not the guru here, of course not. I only share my knowledge I built up during the last 22 years. So, and be aware, you know, everybody, every human being has its own pen, and me too. So what I see is not right or false. It's just my perception. And I want to share my knowledge with you. That doesn't mean that it is right or false, but you can prove it by yourself. And this is a deeper cause of this morning briefing show, which we do every day, that I can prove you that these two strategies I work with are really profitable on a long run. Be aware, on a long run, not in 3 months, at least 1 year, you will see, if you have the chance to make this show 1 year, then you will see it will be successful, because it's normal behavior of every kind of price. So, and now in this kind of trades, we see, yeah, we were expensive, or we're still expensive in that price. And you can see a little bit, the price is coming down and down and down. So, and this is what you should trust. Yeah, trend, because there always exists a trend in trading, because the trend is based on movement and correction. And this movement and correction is based on human behavior, because every trader has its own perception. And do you have prices where you have more buyers, then the price is moving up, and you have more sellers, the price is moving down. Because what is the task of every exchange around the world? It's always the same job they have to do here in Frankfurt as well, at the stock exchange and in Forex exchange as well. The exchange has the task to keep in balance supply and demand. So, and where will be the next price? It's just based on volume. And you can see it in the book map, because prices are jumping from volume to volume. So where are the higher volume is, there where you will find the next price. If you have more volume on the seller side, the exchange must keep in balance the price to the seller side. But if you have more buyers and you have more volume, not the number of the buyers, the volume is important. The price goes in and up. The price is going up because you have more volume on the buyer side. And this is how movement and correction occurs and develops. And at the end, this consistently moving between movement and correction, is consistently changing between moving and correction, is what finally leads to a trend. And then overall, you see the price, because people trade the price. Only unexperienced trader are focused on the label. And this is a problem, because if you're focused on labels, you feel a kind of emotion, because you wear glasses and you look through your own ego glasses, your own personality. But on the right side of the chart, there is no personality. There's just the price, no more, no less. So, and as I promised you, we will make this kind of experience, that we will see that the price will either go back to the point of control, or we can see, okay, they built a new price level. But actually you can see there is no obstacle on my way down to the point of control. So we can speculate, and you know, speculate, the Latin word is speculare, and speculare doesn't mean gambling. Speculare, you can check it on Google for if you want. Speculare means watching around, just watching, not touching. That's a deep, deep difference. So check it. And if you handle your money management in a proper way, you can follow the rules all the time. But this kind of money management shows you have to take lower money, less money. Because if you are too high involved in your trade with maybe high leverage or maybe with high lot sizes, then you have a look at your money. And then you are always touched by emotions. And this kind of touching will lead to irrational actions in trading, like trading the stop too close to your current price, or maybe too far away because you cannot bear the next loss again. So, and then you feel these emotions. And this is a part why so many people fail in trading. So think it a kind of through, and then you will say we are on the right track. So let it run. So we are in. The purple line means I trailed my soft stop, and I published it yesterday on Twitter, of course, into the profit. So we cannot lose that money anymore. So, and I speculate maybe we see a kind of correction, but finally we will see a trend continuation to the lower side. And if you will reach this blue rectangle, then I will sell half of my position, and then you have a free ride. And then let's wait what happened in the market. So one of our really good trades is Euro Swiss franc. So we sold half the position already. The purple line means we are in profit with our trade, and that's not that far away from the point of control. And here we can see, okay, maybe we will see a breakout here, and then the next target or the first target is the point of high. And finally, let's see if we reach the point of control. I'm quite sure we do that. And if you can hold it out, you will be rewarded by the market. By the way, this is just a phrase because the market doesn't know you. He's not interested on you. I am interested on you, and Admirals is interested in you, but not the market. The market doesn't know you. Open the order book and try to find your name there or the reason why you are there. You will find only 3 columns: buyers, sellers, price, and the 4th color is the volume. No more, no less. That's all what you will find there. So stay more, try to find more distance from trading, from this emotional way, and be focused on your rules, whatever kind of rules you follow there. Yeah, you don't have to follow my rules, by the way, of course not. If you feel kind of familiar with my rules, and if you say, okay, I guess it works, then you follow the price, then you follow that. And then you will see we will have our success. But we need time for that because we are in 4-hourly chart. Yeah, and this needs time. So are the rules still fitting so you can open a trade? Yeah, of course. Maybe you remember the show where I explained the kind of the law of probability. So that means if the conditions are there, kind of you see the rainbow, then make a picture. And this is what you see there. If you see the rules and the rules fit, push the button, calculate your money and push the button, because you cannot know what happens next. We know that the rules, which means we follow the trend trading, it's a back test, which goes back to 142 years or 143 years right now. Yeah, and we have this probability of 70% hit quote, which means this kind of rules protect you. But we have 2 other milestones, and this is cut the possible loss if the trade is not one of the 70%, but let the winners run. If you have a good winner, let it run until we reach our final target. But if you see that the rules fit, push the button. That's really important in trading. So Euro Swiss franc, we are on track. Next one, New Zealand Swiss franc. Here you see we opened a new trade. By the way, the point of control is quite far away. And yeah, we are we are circling around our entry here right now. So what is to do? Nothing. The purple line means this is my soft stop. And the soft stop is a kind of mental stop, because you see the red line is my real stop where I calculated my money. I'm willing to invest in that trade, in this trading idea. But I know sometimes it could happen that I'm sitting in the wrong bus. So, and no smart human would stay in the wrong bus if you realize, okay, today it will not drive in my direction. So then get out in the next station and try to figure out the next bus which is working for you. So therefore, I trail or I work with my soft stop, because sometimes we have a kind of spike, and if you have your real stop there, you get out. And that must not happen if you trade smart. And the soft stop means I only act if I have a close above that, a real close, and then I can trade it, and then I can cut the loss. But sometimes the market will test you if you are strong enough for trading and if you are really willing to change yourself. Yeah. So, and we closed one trade yesterday, and this is the FTSE. Unfortunately, anywhere we had to trail our hard stop, but here is another proof. We reached almost the point of control. Yeah, maybe we'll reach the next step, but this is another proof. Look at this one. Yeah, we missed our final target. Yeah, it is, but we sold half the position. We didn't make a loss. It was a winner, and this is cool. It's just a trade, and now it's over. The trade was a winner, and now forget it. We are looking for the next chance. It's not a reward. It's not a punishment. It's just a complete neutral trade. The point is, we stuck to the rules, and Next step, we followed the plan because we trailed, because we had a close above or below my purple line, which means that was my soft stop. So I trailed my hard stop and the market got me out yesterday. So, but it was a winner, fine. Take the next one, just a winner. So, and my question before I come to that trade, I want to explain something. I have this question for you today. It's a kind of base what you talked about yesterday, because unfortunately, I explained something wrong yesterday. So let me ask you again the poll of the day, and I hope Anna will publish this and will give it free for now. So the question is, do you think, or is YouTube just a reliable source for your trading knowledge? So there are three answers. Answer number 2, yes, it is. Answer number 2, I'm not sure right now. Or maybe answer number 3, I must figure it out first. So the question is YouTube a reliable source of trading knowledge? And it's a kind of based on what I'm talking about yesterday, because there was a big mistake yesterday or misunderstanding, because I was not able to explain it in a proper way that we understand it. So the question is YouTube a reliable source of trading knowledge? Yes, it is. I'm not sure yet, or I must figure it out first. So therefore, I want to give you a quick hand, and I want to show you interesting stuff about YouTube. Here you see there is the, come on. So here is the YouTube channel of Admirals, and this is the video channel from our morning briefing show. So there are all sessions in since we started in January the 18th. And you can see what we prepared for the rest of May. So kind of, so next week, we started with trading education material. Then what should you achieve with trading? How can trading improve your life? That was what we prepared for the next week. Oh, how to identify a Heikin Ashi candle. So how to use the volume indicator. And number one thing to look at it in chart, how to handle fear in trading. How much life experience do you need in trading? So that's the topics for the rest of May. So, and based on that, let me explain this. The question is YouTube a reliable source of trading knowledge? Yes, it is. I'm not sure. I must figure it out first. So we have a kind of between yes, it is, and I'm not sure. So let me explain. The answer is really clear. Yes, it is. And I explained it yesterday, unfortunately, yeah, stupidly. Sorry for that. I want to apologize for that. Of course, is YouTube a reliable source? It depends what you're looking for. So the point is, we have always two sides of a matter, you know. So the positive side is you will find a lot of things on YouTube. So the less good part or the less good side of the matter is it could be a kind of overwhelming. So the point in YouTube is that you will find there a lot of marketing and advertisement. So, you know, I have experience for more than 20 years right now in this complete trading stuff. And the point is, I figured it out by myself. It's more easy, or it is easier to sell a strategy by showing on the theoretical part. It is more easy to sell illusions, dreams, and how you can make money. It's more easy to sell any kind of, or to make marketing with an indicator or something else. And you can do it on a demo account. That's really easy. That's not the part, that's not the real stuff in trading. But it's more, or it's so much harder to make money on a real account. There you will find a mess of information on YouTube where people show you how you can make money. So YouTube is an absolute reliable source of trading knowledge if you want to figure out how kind of indicators works, if you want to have kind of fundamental information. And of course, there is a special reason why we share our morning show on YouTube, because we want to reach a lot of people with that structured way, how you can become successful in trading. So therefore, of course, is YouTube a reliable source of trading knowledge if you figure it out that it fits for you, because everybody is an individual and completely different person. So there are people outside there that see that stupid thing what Marcus is talking about, but there are other guys who say, okay, that's cool what he's talking about. So let me share this with you. What I'm talking about is not right or false, it's just my perception. But you can test me. You can check my accounts, they run for more than 1 year. And you see on my other accounts, I have more accounts, they are in profit after 1, 2, or 3 years. So you see it works. So use YouTube to get trading knowledge, and use, of course, this channel of our morning briefing show to see what we're talking about next. Sorry. And to repeat some things. So, and of course, millions of trading strategies, it can be really a distraction. And this is why you should YouTube very carefully. You can spend hours and hours and hours, you know it by yourself, you can spend hours to figure it out on YouTube. And it could be really confusing, by the way. So, but once if you find your way, and if you think it could be cool for you, then stay in one strategy and train it. Because you know, there is no strategy outside there with a 100% guarantee. It's always probability. Whatever you do in trading, at the end, it's always a probability. If you think it through, it's a logic consequence. Yeah, that trading must based on probability. Yeah, so if you have people around you, they are interested in trading, then share this channel of YouTube and share what we're doing here on Admirals, because we make a lot of effort to share our knowledge with you. So, and therefore there's a clear answer. YouTube is of sure a reliable source of trading knowledge, comma, use it wisely, yeah, and don't spend too much time to figure out, or if for seeking the holy grail in trading. Believe me, if there were a holy grail in trading, someone have found it, but there isn't. I can comfort you, there is no. You stop seeking for that. Follow rules, follow our show, and you will see it works. And I have a new information for you in the next minutes. Okay, so thanks for joining the poll, and I will show you. And now I need your help again. So check this chart, please, and type in the chat box. What do you see? What happens? Do you see any specific behavior? Check the chart. What happens? Can you see the, how should I say, the holy grail? You know, it's a kind of holy grail. It's not the holy grail. What do you see? Can you see the big, big hidden truth there? Can you see? Type in the chat box. If you don't see it, yes, say no, I don't see it. If you say yes, what do you see there? So we see an uptrend, we see market price and point of control now. The price is circling around the point of control, price volume. What do you see? Type in the chat box. Honestly, if you see, if you say, I'm not sure what I see or what you're talking about, then say, no, I don't. Here I want to explain you, point of control reached after a big buyer push, large volume areas, the significant moves. Of course, yeah, price returns to point of control. Exactly. And you see what happens. And of course, I can prove it. The point of control didn't change or doesn't change to the last days. The point of control left at $34,136 for one contract. And you see, this is a really reliable source of knowledge. The point of control, the price moves from the point of control up in an expensive zone, came back to the point of control, moved to a cheap price, and came back to the point of control. This is real trading, guys. And you know what? That's not a secret. You have to go deeper. You have to go to the basement, where you can see where you have to put the light on, that it can happen in the 32nd floor in a skyscraper. So this is the real truth. So, and it didn't happen anyhow. No, let's take the last one from cheap price back, and not look at this one, guys, not anyhow. You see that? Punctually, really pinpoint hit, pinpoint hit, not anyhow. So, and how was the way? Was it anyhow? No, look, it was a trend. So let me draw it for you that you can understand it. So what the time, oh my gosh. So, but I want to show you this, that you know and that you trust me, what I try to talking about. So here we go. Movement. Okay. So you see movement, then correction, then move. Yeah, there was a little bit close above the last 0.2, that's fine. And then the correction, you see, exactly rejected at the point of low. There was your balance candle. It happens yesterday around about 1:20 p.m. There was your chance to go back by a trend based on our rules to the point of control. And that's what we want to use for our trading. You can use that behavior in every time frame, in any underlying, even in shares, Tesla, Apple, whatever, in every time frame. And finally, now the price is circling around the point of control because it's normal behavior right now. So, and what you have to do, nothing. And the price is at the point of control, yeah, let it go. But if the price is developing a new trend and you see, okay, the chance is up that the price is moving now in an extreme zone, then you can use it. And you know what? I decided to use it with you up to next week. I want to trade in 5-minute chart the Dow Jones because I only use this one chart in day trading. If I see a chance, I will do it with you together because I share it on YouTube, on Twitter, then not on Twitter. Yeah, there's on Twitter then. If I see the chance, and I will prove you that it works in that way, but just only this one market. Yeah, because you know I have to keep keep on the law of probability. Yeah, so you will see it, and I will do it with you in 5-minute chart. So make sure that you can follow that, and you will see it on Twitter then. And then you can see it works in 5-minute chart as well. If I see a chance next week, then we will do it in that way. But do it, if you are not sure, then do it on a demo account, paper trading, yeah? If you want to do it on live, then use small money that we can do it. And we do it in the same way, working with soft stop, cutting losses, and let winners run, okay? So for the rest of the day, there is no more chance we can use. No trading ideas for today, just only Euro, New Zealand dollar. And I want to finish the session today with that. So we have a trend. Now we failed, as I promised you, as I explained yesterday. The price were rejected exactly at the point of low. You see it, and this volume zone came back. And you know, check the show from yesterday, and you see we made the retest of this volume zone, and now we can set our pending order above the last high from yesterday, close to the last point 2, on our way back to the point of control. So if the price will go in deeper, then we delete the order. But if the price will go up and will continue the trend, then let's do it in that way. Okay, guys, I hope I were able to explain it better, what I think about trading and how you can become successful. And I hope you will watch the show next week again. I wish you a lovely weekend and a nice Friday. And the only thing what I want to say again, have courage and be kind. And may the force of the rules be with you.